what's going on here. Share screen. Share screen. Right, should be, well, will be a busy, perhaps a more, one of the more busier Mondays, given the weekend developments. Right. Right, I think we're all good to go. Good to go. Good to good. Good to go. Right, screen being shut. Okay, good stuff. Right then, ready to rock and roll, guys. So I hope everyone had a good weekend. And we'll start off by looking over to the US dollar. Right, so what are we seeing here, guys? Anyone care to chip in and let's have a bit of two-way dialogue? I think we've done quite a number of meetings and it appears to be the same crowd, which is great. Always good to see you here, guys. And I think we're sort of starting to get traction with well, being familiar with the way that we read market structure and how we can use it to set ourselves up for our trading session or sessions. Yep. Dollar to fall from resistance. It looks like the dollar could fall again. Certainly does. Okay. Yeah, so um, we've got this price here that's several weeks of running high, starting. Well, it's coiled. We've broken out, um, and we are coming back in on that breakout, potentially retesting the breakout level. We're not there yet, but perhaps we're going to come up a bit further, or perhaps not. So we'll just have to be on our toes, ready to maneuver. We've got structure on the hourly chart on this candle that I'm zooming in on. Okay, so we can mark that off with a horizontal ray. So we've got the top as a support, and then here is support. So we can mark off the entire candle. We've got a firm bid coming up. Right, if we pull our chart out to the weekly chart, we've got this W formation. So I've written some notes here last night. The 38.2% Fibonacci retracement area, which is over here, which aligns with the neckline pretty much of the W formation. So that could be a target for the week ahead, a couple of weeks ahead. Okay. Now then, so what has anyone looked into what's causing this weakness? Friday we closed up high and we shot lower in the open and continued lower. Anyone been paying attention to what's been going on? China. Yeah, yeah, correct. Japan and China. Okay, very good. Okay. Now, let's be a bit cautious with regards to calling the Bank of Japan hawkish. I'm not sure that they're particularly hawkish. Um, they were talking about more that they are data dependent. Um, to me, it's a bit of a coincidence, really, as the look at the dollar yen. And so this report comes out at a time where dollar yen is right up at, well, pressing up in the 147.80s. Um, we had we had the same rhetoric last time around. This happened. I can't remember when it was. It was recent months when the dollar yen was this high. We had a report out from Nikkei, I think it was, and talking about discussions around the Bank of Japan with regards to yield curve control and monetary policy. So this really comes in line with a very high dollar yen. Um, so the governor said that the bank might have enough data by year end to know whether I've got a very slow computer here, wages will continue to rise, which has become a major condition for removing stimulus. Um, so essentially, to wrap it up, it's data dependent. Um, and at the end of the day, wage data has been very disappointing, with July cash earnings data that came in weaker than expected, and we won't get August data until October. Um, so therefore, until the Bank of Japan actually tightens, whether this yen appreciation can be sustained or not is yet to be seen. So data out of Japan is going to be a bit more interesting for the next couple of months. So there's going to be a bit more focus on data and ears on the ground for further jawboning and the prospects of FX intervention. But so long as the monetary divergence between the Bank of Japan and also the Bank of China, um, so long as they remain, the divergences between the Fed, the Bank of Japan, and China, people's Bank of China, then further weakness in both the yuan and yen is likely. And then with regards to the US dollar, uh, we've basically, there are odds. So we've got the Fed coming up next week. And in that regard, there's only about a 5% odd of a hike in September from the Fed. Um, and the next likely hike won't be until November. And before the November meeting, we'll have the non-farm payrolls report first week of. Um, in fact, it may only be, hold on, so September, October. We may only, no, I think perhaps the meeting will only have one more non-farm payrolls. Anyway, we'll get jobs data, important jobs data, and we'll get a couple of CPI prints, PPI, retail sales, PCE, all of that to go on um, before the next November hike. But when you look at the performance of the U.S. economy compared to, say, for instance, that of the UK and Europe, there would likely be more favoritism to a stronger dollar. So just bear that in mind. So when we look at this dollar here, which yes, it's breaking down technically, um, I mean, for us trading these US sessions, it's really here nor there. We're looking for movement. We're looking for setups on the day, but overall, it's nice to have a picture of what's going on in the fundamental background. But I'll just be cautious staying too short of the US dollar. So holding, especially as we approach data events. Speaking of which, this week, let's have a look at what's hot on the calendar. Um, for the week ahead, we'll have Wednesday CPI from the US. So this all can be found on the FX Street calendar. I'm just going through what a list that I've made for the week ahead. Um, so we'll have US CPI on Wednesday, and on Thursday will be another important day. We'll have the PPI, retail sales, unemployment claims. That's all from the US, as well as the ECB. And then Friday will be another important day with Empire State Manufacturing and consumer sentiment. Bum, bum, bum. And then out of Japan, which we're going to have a focus on as well. Just going through here, producer price index. Okay, we'll look into that further as we approach the rest of the week. But so for today, nothing hot. Tomorrow, UK employment data. And then we'll look at Wednesday as we come as we get closer to that. So nothing on for today, which is nice. Right then, now we can start looking into our potential setups for the day ahead. And do put in the comments, guys, anything you want me to look at as usual. Right, so remember, as we approach the middle hour of New York opening, so by that I mean New York currencies opened 7 a.m. All right, we're now 8 a.m. and Wall Street open 9:30. All right, so we've got an hour or so until we really need to start rolling up our sleeves. That's not to say that we can't get any trading opportunities between now. The closer we get to that New York Open, so let's see what's cooking. So we've got a dollar here that we are biased bearish, and we're creeping up towards the breakout area. So the nearer we come to here, I'd expect there to be selling pressure. So we've got a bit of selling pressure coming through already. That's now the 15-minute chart that we're looking at. So we're on the front side still of the bullish trend. And I'm just going to mark out this this level to this wick down there that we're fast approaching. Now, we have just turned a new hour, so it's usual to see volatility at the turn at each hourly rotation. For me, it's the 5 minute, 15, 1 hour, and 4 hour rotations that are important, because those are what we lean against. So if you're entering the market, ideally, you want to do it with momentum. You want to get in, you want your trade moving into profit, and you can start maneuvering at that point. So on the hourly rotations, you tend to get good volatility, good movement. Anyway, so that's what we're getting here on this Dixie. This is the 15-minute candle, and it's fast approaching that support structure. So yeah, that's the 5 minute chart now. So really, 104.30, a break of that level being a swing high would start building confirming the thesis for a break of this trend to continue lower, and that will set us up bullish on the yen, pound, euro, gold, indices, Canadian dollar, Australian dollar, and so forth. All right, so I've marked this watch list off. So red for bearish, green for bullish. All right, so generally. Looking at the 10-year yield, we had a first red day that is still to be done, broken down market. So those are my notes from last night. So we're in a broken down market. We had a first red day on Thursday. We came up strong into resistance. So that could be a sell high opportunity. So that would be favorable for a weak dollar outlook. We did break structure over here, but we sort of triple bottom down low at this old resistance. So there's a bit of caution in this, but that's not to say that we can't come lower for the day. So again, we've got this trend line support on the hourly that may have don't get much data on this chart, so on the lower time frames. See, this I regard as a strong 5 minute, 15-minute candle, even though it's a gap. So until we've broken, let's just say until we've broken these lows, well, these over here, and then these are the swing lows at the moment until we get a higher high. All right, so we're still front side of that bullish trend until we start breaking down over here. That move. And as I said, we haven't quite had a higher high yet. The high is up here. So we're still regarding this one over here. So this is a minor structure. And this is the major structure. So we're coming down to the minor structure by the looks of things. And that same scenario on the 2-year. Well, we're well and truly breaking down here. Yeah, I mean, okay, so we're backside pretty much on the 2-year. And these track Fed sentiment more so closer. All right, so pretty bearish here, guys, on this dollar now with this 2-year looking pretty broken down. So what we're going to be looking for essentially are pump and dumps versus the dollar. So we should have a market then, therefore, we'll go to the euro because someone's asking for that at the moment. So we've got a weekly M formation on this euro. So it's worth noting what's going on the bigger picture. Right, so we've got a weekly M formation. That is a reversion pattern up into the neckline. Not to say we can get that all in one day, of course not, but we have an upside target to 108.35. If I were to pull up the Fibonacci, the 38.2 is 109.10, which aligns with that spike low from end of July. And it's still within that sort of neckline area. All right, so we can note that level as well. So that's the upside target, might be useful for anyone there that's looking to swing trade, hold on to positions. All right, so that's the euro. For the day ahead, so we're looking for, sorry, I said it the reverse. We're looking for, depending on what currency, right? Depending on whether the dollar is your vehicle or whether it's going to be the front end of the quote, but euro dollar. So we're looking for higher highs in this euro. So we're looking for a peak formation. So we'll put this to it's currently an inside day. We've got an ATR value of 71 pips on the day. How many have we done so far? So did we gap up, did we? I think we gapped higher. Yeah, we would have done. So let's just mark it from the close. Done about 45 pips so far on the day. Um, so this is our peak formation low for the day. All right, so we're looking for the market to come down low so we can buy it low in the euro. Uh, Note we'll have stops below here, so just keep that in mind. Anything can happen. The bias is for a continuation higher, but just keep that in mind. We've got stops below, and we're targeting above Friday's highs for a move higher. So we're looking to 107.50 as an upside target. Or even last month's lows, 107.70, because that would be within our ATR for the day. All right, so there's definitely going to be stops um, above these highs, right? So to target, and likely stops around last month's lows as well to target. So this will all be liquidity in the unit. All right. Now, in terms of, let me just turn off the inside day bar so we can get a better look at what's going on. So we're back below the point of control on the day so far. We are, let's go down to a smaller time frame. It's quite a strong move to the downside, that. We definitely broke structure. So we're building the dump potentially before the pump for our Wall Street bias. But just be cautious because this is a broken down market. Now that dollar has firmly pierced our first target for support. All right, so this is giving us a weak dollar outlook. So that is bullish for the euro. So what we're hoping to see is this dollar recover. It comes down to the point of control for the day. A high volume area on the charts. So we're looking for this to correct up. So we've got an hour or so until the Wall Street open. So we're looking for this to creep up to come lower. And that will give us our entry for the euro in the opposite direction. Okay. Yeah, 107.16 is the low of the US day so far. 107.15.5 on this broker. And we've got a high that we're starting to print at the moment. Good evening, try. What does that mean? Entry on my phone. No, no. All right. Okay. No problem. All right. Um, Now, the thing is with the euro is that it's still on the front side of this bearish trend. And unfortunately, if we're going to be breaking that trend at this point, it's pretty high up to be entering the euro, high up within the day. I'd be looking for a better trade setup elsewhere, to be fair, um, because I want to be buying low. So unless we get a sell-off and a break of structure, a break of resistance, so that I'm buying low, I'm not going to be looking at this one, I don't think, at the moment. But we've still got plenty of time for developments, right? So we can look elsewhere. Any other pairs you want me to look at, guys? So I'm just sort of scouring the. I'm going to look at the yen and see how we're doing. Right, so this yen was in a. I drew this M formation, so we're already selling off into the neckline of that. So for me, that's a missed opportunity because I would have liked to have shorted that. Never mind. Um, so we're coming into a support area. This could well return to the upside and give us an opportunity later in the day. We've come in pretty much to the neckline thereabouts almost. You see how we broke the, what do you call it, the support here. So we broke and engulfed. So on a 5 minute, that could have been your entry. I mean, ideally, you want to be entering on that candle there, in fact, and that would have been an easy trade. But missed it, guys. Apologies. We should have jumped on that one. Not to worry. Um, but what could happen from here, you see, is we can come back in, and that set us up for the day ahead to short again. Right. So you quite often you get one peak, then a second peak, maybe a lower high, and a breakdown of that structure to short even further for a longer term day trade. So keep that on your watch list for a return and dump, pump and dump for the Wall Street Open, perhaps. Um, so we'll just write pump and dump on the chart. And then in terms of targets, so drop, pullback, continuation. That's on the 4 hour chart. It's a bit too swing tradey for me. So, but we've come up 300 points. You've got tier one up top, level two, level one. So we'll be targeting probably for today. What's the ATR on this. Doesn't give me it on a. Why not? Should be there. Can't see it for some reason. Bear with me. It doesn't want to give me the ATR. Okay, bizarre. Okay. 120 pips. What we've done. Yeah, I mean, it's pretty pointless because this is an outside situation, really. Um, well, I'd say the low of the day, really. Stops below. Come into here quite easily. 145.50. 145.50 on the downside. Right, but we do need to see the trade set up. I'm not just saying sell it. I'm saying let's wait and see if we get the pump and then the dump. Gold I can look at. Yep. So we're bullish on gold. A note to buy low, already high up in the day. So that was good for London. We're looking for the dump for the pump for the US session. Um, just looking at this gold from another perspective. So if we look on this weekly chart, so we're well inside of last month's. We're right in the middle of last month's range. We've had a change in character to the downside. Um, Therefore, overall, for those swing traders, you might be looking for uh, a move lower because we've essentially broken structure, and this trend line is now bearish, right? With front side of the bearish sell-off. We're coming up into resistance. So I'm just going to be quite cautious of holding longs in gold, but for a day trade, it's not a problem. Right, so I hope you follow me there, guys. We've broken down structure. We broke these highs over here in that move, and we've also broken further structure with this candle breaking over here. So this indicator, I don't know, is a bit delayed. I would have thought that it should have picked up on the Well, I guess it wasn't a swing low, was it, over here, really, on the weekly? Um, okay, either way. Right, so as you can see, we are more bearish than bullish on this gold overall, longer term, but if we're looking for dollar weakness, then gold should benefit. So are we getting the dump before the pump? Quite possibly for the day ahead, right? But again, we're pretty high up on the day. If we'll be looking for longs, so we'll need a significant move lower to want to start getting regarding this as a candidate for going long. ATR is about $16, and we've already done 14 of those, right? So that's not to say that we can't come up a bit higher into the mid 30s. But we've taken stops, you see, so we've swept liquidity above these highs. So that could be a stop hunt for a. So we might, in fact, see. Now, see, we're breaking also. So we've got this M formation topping pattern. So we've got this peak formation here. We've got this M formation, which is a topping pattern. So we could have a engulfment. It looks like we're trying to engulf here. So we might be seeing the dump, which is therefore breaking structure, putting this onto the bearish side, okay, of the market. And therefore we are, oops, therefore we are on the front side of this bearish trend. So I'd be cautious trying to long this market, all right? So we've got 28 minutes before the close of this candle, and we've got an hour until Wall Street opens. So what we could be seeing is the dump, and then we can have a bit of a pump, but I'll be cautious because all of this will be resistance, and it could well lead to a continuation to the downside. Interesting. All right, do we follow, guys? So as you can see, we've got a decoupling in gold and the dollar. We've got the dollar, which is selling off, and so is gold. What yields doing? Well, yields. Okay, so the yields are finding support, which is weighing on the price of gold, the 2 year at least. Right. So tricky one. Need to keep an eye on all these things and not just go in blindly. Right. Any other pairs you want me to look at, guys? Yeah, gold is moving quite strangely. well, you say that, but I mean it's moving in line with bearish, the longer term bearish outlook because we've come up to sweep liquidity, and that could be the liquidity that provides a meanwhile move to the downside. And if we've got yields that are somewhat robust today, I mean, they're not really, I mean, they have broken down, but we're not really getting much of a follow through. So this could all be support, and you might be surprised, and we'll get a pickup to the upside. So we might be seeing the dump before the pump, and that would be bullish for gold and would bring some stability into the dollar, which has already sold off pretty heavily on the day. That might well need to come back up even further. It's not to say that just because we've got resistance here that it's going to act as resistance. We may see it sort of move back up into um, an equilibrium, which would be up, maybe even up to close the gap. Right, we've got the closing price all the way at 104.70 ish. So we could have a spell above the point of control and that resistance up in here, and therefore that would be in line with a um, sell-off in gold, which at the moment for me, I mean, if you look at that chart, I mean that's the more favourable outcome. It's a sell-off back down towards 1920 at the moment, because that's the path of least resistance, and we've already had a sweep of liquidity up high. So for me, I'm bearish on gold at the moment. Um, yeah, so just gonna have to keep an eye on all of this. Right, pound. Pound is up high on the day, so we're looking for shorts. We are front side of the um, old bearish trend, however. But until we're down low, I don't want to be buying it. So I'm looking for shorts and then longs, perhaps. And that would be the same for the euro. Looking for shorts up high and then longs. So we're actually looking for the pump and then dump. So pump up to come lower. And then potentially up higher. Remember, this is Monday, guys. So Monday, less likely to give us the big moves. But I do anticipate a bit more volatility today, all because of what's gone on from over the weekend. I mean, what we might, however, we might just see some consolidation. I mean, we've already had the big moves. Maybe we'll just see consolidation. Yeah, put the question in, and I'll be happy to answer it. Right, so dollar CAD. Dollar CAD dropping in line with the forecast. It's just a shame that we haven't had. You see, all of this was great for London traders, but not so much for us. But this is more of a continuation trade at the moment. But what we need to see is a move up to continue lower. So we might get a skip to the upside out of the US Open. So we're dumping before the pump up. Front side of the market, however. So if anything, we'll be looking for shorts maybe later in the day. We're coming down pretty strongly into last week's low, where there's bound to be stops below. So a pump up and then a short would be a continuation trade to target below last week's lows in the 135.70s. ATR is about 70 pips, and we've done about 50, 60 of those already. All right, and then we can look over to the Aussie. Right, the Aussie has prospect of a continuation to the upside, targeting 64.50. Comes in line with this breakout level over here. All right, so targeting the 64.50s ATR. We've already done the ATR, but it's not to say we can't do more. So it's very reasonable to expect this to run up into that level, that target area. But we want to be buying low on the session, which the session opened over here. So these are the lows. We want to be buying in and around, at least in level 2, 64.20s would be nice. Let's see if we don't get a push down to come up. This might get a sell-off for a scalp into the 64.20s. We've already broken structure, I'd say. So we're actually on that move there. We're already backside of that. So that was the structure over here. 64.30-ish, 64.36. So we've broken structure. We're making a bit of a topping pattern, perhaps, for the US Open. Got peak formation low. Right, so perhaps we're coming low to go up, coming down to come up. Right, I'm going to come to your questions shortly. I'm just going to go finish up on these pairs. Still got plenty of time before the Wall Street Open. 15 minutes or so until the next 15-minute rotation. It'll be also worth looking at the yen crosses. Let's just look at the Dow. Quick glance at let's look at the Dow quickly. So the Dow, we've had peak formation up high over here. Breaking down structure. We've moved back up in the inside of that. Let's put this to a 15-minute chart. We read it more easily. I'm going to get rid of all my markings. No, I shouldn't do that. In fact, hold on. We've got a weekly and daily M formation. We'll look at those. So that's the daily chart. We've come up towards resistance, the neckline of the M formation. Subsequently sold off pretty heavily, but we could be moving back up into for continuation. We're still front side of the bullish trend. All right. So got an M formation being put in place here. All right, so you're looking, I think, with this one, you're looking for shorts. We're at the highs of the day pretty much for the US session at least. So that's stacking up to look quite nice. If this dollar continues to strengthen and yields remain robust, then we could have a short opportunity in the Dow. First green day, right, so again, short opportunity in the S&P. It was a first green day on Friday, which resulted in a continuation to the upside today. But I don't want to be buying up high. So this is still very much front side of the bullish trend. So can't short it until we're on the backside. So I'm not really seeing an opportunity, and I don't know that we're going to get anything in the immediate future. We're pretty high up unless we get a strong move down before the open. And then a move back up in the inside to short. Same goes with the NAS. Right, with the NAS actually, yeah, the NAS could be shorted, but just bear in mind we're still front side of the market. But the NAS has started to break down structure. On the 1 minute chart, we've come back up into the highs of the day, pumping up, potential for a short, but beware of the support structure. We're breaking the highs of Friday, which is nice because that could be a stop hunt, that could be a liquidity grab for a continuation to the downside. But bear in mind that you might get some support as we come back in to test these highs, this support area over here. All right, so now being asked some questions here. So we've pretty much gone through all the pairs here. I think it would also be worth looking at yen crosses just quickly. Sterling yen up high, selling off. All right, so that was a missed opportunity to short. We've already looked at that across the euro yen. Okay, that was a shorting opportunity as well. So what we could be looking for here potentially would be for a move up and a continuation lower. Same with GBP, JPY. Looking for the pump and then a continuation. For the low hanging fruit down into the lows of the day and even lower perhaps. Okay, so keeping an eye on those pairs for later on today. Um, Gold is moving straight. Russ, I have a question regarding indicators. The smart money one. Sometimes it will hit a level on a smaller time frames, put in a chalk, and then once it retreats, just deletes it. What is the deal with that? So it's repainting, perhaps. Yeah. So maybe the bar hasn't closed, or do you mean even after when the bar has closed? The best thing to do is just use these indicators. Um, lean on them. Don't completely rely on them. It should alert you to key areas on the chart at least. Yeah, yeah. It's because the bar hasn't closed. That's why. All right. Um, okay, no problem. Why is dollar yen ranging 100 pips? Please explain the break of structure. Dollar yen. It's because we had some comments coming out from um, Bank of Japan with regards to monetary policy. So the yen is very weak, and we can expect verbal intervention to try and strengthen the yen. And markets are nervous. So markets don't, I mean, we talked about this on Friday, I think, in the meeting. You don't want to be too long or too short of the yen or long dollar yen because we're up at levels where intervention is on the cards and you'll get journalism and all sorts in the media talking about it, and that is making the market nervous. Um, it's making yen shorts nervous. So that's why we're getting bigger volatility in the yen. All right, so we're going to wrap it up here, guys. I think we've basically had an extensive meeting this morning on all that's setting up. Um, so just keeping an eye on this dollar. Is it going to continue strengthening, or have we seen the end of its rally? Want to watch yields as well. Want to see a breakout in the 2 year. We see a firm move in this 2 year. That will should firm up the thesis for selling the dollar and buying everything else against the dollar. All right. So again, I'll be in the chat room anyway, so you can put your questions over there as well. And I wish you all the best for the day ahead. Um, let's see if I can just find a hot pick for the moment. I want to see a pump up in the dollar yen to short. Maybe we'll get a scalp in the open, in the a scalp to the downside in sterling and the euro. But I wouldn't be holding on to shorts and dollar strength, to be honest. And then gold, I'm being asked. Well, tricky one because I want to be long of gold, but it's a broken down market to the downside. Longer term, we're bearish. Front side of this sell off, we've got length to, I mean, maybe a scalp to the downside, perhaps. And if that's the case, if we do get to the downside, if this price sells off, then I'll be looking for longs um, for a move up into test resistance and to test this bearish, overall bearish trend line resistance. But for the meanwhile, it looks like a scalp to the downside, as and some dollar strength, but coming through perhaps for the open. Right, so if we're getting a bit of a sell-off here, perhaps we're going to get a move up. But again, I wouldn't be holding on to the dollar for too long. Okay, guys? Right, see you in the chat room, guys. Have a good one. Best of luck.